Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million in annual revenue and beyond, build $1 trillion in global GDP and 10 million jobs. And in support of that mission, we do these free mentoring roundtables week after week after week. And this is our 360th session. It's been going on since the fall of 2008 when we started experimenting with this format. The event is being recorded. You will have a recording available after the session. Our Twitter channels are at 1Mby1M and at Romana. Follow us. There's a ton of great content that we publish through Twitter. And if you're live tweeting the show today, please use hashtag 1M1M. And the 1M1M Roundtables channel on YouTube is where you'll find recordings of all our prior sessions. It's a great body of material to learn from if you're looking for something to, tune into for, maybe listening while you're driving and stuff like that. And this is good material that you'll learn a lot from. These are the call-in instructions. I'm not ready to invite you to call in quite yet. We are going to do that a little bit later in the program. We have some other things before that. But it is a roundtable, so we want you to participate as much as possible. So do make a note. We will put the slide back up again, but do line up your questions and stuff you do want to call in with. I would like to first introduce you to J. Paul Haynes, CEO of eSentire, for a first conversation. Welcome, Jay. Great to have you here.
Pleased to be here.
So, Jay, there are opportunities of building cloud businesses focused on the mid-market customers, and many entrepreneurs are leveraging those to build compelling businesses today. Tell us about eSentire's business. What do you do?
Sure. eSentire is in the world of cybersecurity, and we actually have taken it upon ourselves to solve a very difficult problem. That's building the technology and running it for the customers, and it's really quite a stark contrast. We have built a business to target mid-size organizations, and mid-size organizations have greater challenges than some of their larger ones from the perspective of the lack of resources and the inability to monitor their networks on a 24/7 basis. So the whole genesis of the business, which began in 2001, was to take on this problem and own it for the customers. So we have always been focused on the mid-market, and we have developed some techniques or tradecraft, as we refer to it in the industry, that are very advanced, very much mirroring what you might find intel agencies doing. And we've created a version of that which we use in a commercial setting. And over the years, we've been sort of lobbying the analysts, and a couple of years ago, they started recognizing that what we were doing was a distinct new way of delivering cybersecurity solutions, and they created a category around what we do, as well as a few competitors as well, called Managed Detection and Response. We are the largest in the world that does this, and we have about 20% market share, and this market is poised to grow 15-fold over the next 5 years. So we're very excited. It was an overnight success that took us from 2001 to this year to get there, but it's been very steady and focused a lot on mid-sized organizations.
So 2 questions. One is, how do you define mid-size? What is, mid-size could be 20 to 50 employee organizations. It could be 500 to 1,000 people organizations. What is your sweet spot, and what is your definition of mid-size?
Yeah, so that has evolved over time, to be frank, but when we started, it was sort of 25 to 500 was our typical target customer. Now it would be probably more likely, 25 to 25,000. And those are still, in some definitions, on the lower end of enterprise, or, small to medium enterprise. SME is one of the terms. Everyone's got their own definition, but for us, the ideal customer, and it varies by sector, will be somewhere in the 50 to 5,000 range. That's where you get the trade-off between recognizing the problem, having a high sensitivity to cyber risk, and also recognizing that you can't do it yourself and you need to bring in an outside party to help. So it's very much a SaaS model business. We deliver security as a service. That includes all the technology, all the provisioning. This is hardware, software, the people to install and configure it and continuously monitor it and stop threats as they're occurring on a 24/7 basis. So it's quite simply a single line item to take care of all of that complexity. And that's some of the terms that we use. We manage the complexity of running advanced cybersecurity tools on behalf of our customers.
And when you started this in 2001, why did you choose to focus on this particular problem?
Well, it's an interesting question. The problem chose us. Just to set the record straight, I joined the firm in 2009. I had been an advisor to it from early on, like in the mid-2000 timeframe. So the market chose us from the perspective of the business started as a consulting model, which is actually good advice for anybody. Generate cash flow, create a little bit of surplus so you can afford to do some R&D, and that was the business prior to my getting involved. But the market chose us in the sense that the firm was developing the technologies, and then the customer said, well, if you just wrote a cron job or sort of a batch process to do all that sort of monitoring work that you're logging in to do, well and then you figure out how to have that notify you, then you could do it on a 24/7 basis. And this was back in the day when there wasn't a really clear understanding of what's now referred to as an MSSP, a Managed Security Service Provider. That whole market was evolving. There's only a couple of firms in the early 2000s that were really pioneering this method of delivery. And eSentire was largely following what they were doing, but the market was the one that really pulled us in that direction. So the company pivoted from being a consulting firm, focusing on financial services in New York City, to becoming a continuous monitoring firm, and then ultimately delivering security as a service. And then when I joined, we had started making some pretty fundamental IP investments, and those IP investments allow us to bring a very advanced capability, which is now referred to as managed detection and response. That's sort of a branch of security as a service.
And where does the capability of doing all this, like the technical capability, come from? Was that capability in the founding team? You recruited the capability? How did you? Because this stuff is, cybersecurity tends to be fairly technical stuff, and you need particular domain knowledge to build a cybersecurity company. Where did that come from?
It's a great question. It's a combination of, I'll give you today's snapshot and go back in time. So today, depending on which report you read, you will see there's 1.5 million open cybersecurity positions around the world. So it's a huge problem for the industry. They can't get qualified skills. It's not something people sign up for and take in university or college at the volumes that the industry is requiring. And the risk is accelerating because the bad guys are using bad guys largely being criminal or opportunistic threat actors. They're using lots of advanced capabilities. They use cloud computing to automate what they're doing. So they're getting very rapid growth, and we aren't able to get the analysts trained fast enough to meet the industry's needs. Which is why the whole security as a service market, particularly advanced threat side where we are, is opening up in such a rapidly growing space. But back when the firm was founded, it was we're right in the sort of the 20-mile radius of University of Waterloo, which is considered to be one of the top 3 computer science schools, computer engineering schools in the world. Stanford, MIT, and Waterloo, depending which person you talk to will, they're all largely equivalent in terms of their advanced research. And so we have our founders both came from there, and we've benefited from being local and being able to hire PhDs from there and and other undergraduates to help us build out our tools. Some of the most advanced crypto in the world has come out of here. There's a company called Certicom, which ultimately got acquired by RIM, which was the firm that pioneered elliptic curve cryptography, which is what is built into the BlackBerry from the very beginning. Well, that kind of gives you an idea of the ecosystem that we have here. So very strong in math, but we're surrounded by 5 other universities and another 6 colleges. So we're a super dense area of higher education, and we recruit from all of these institutions. And that's today, but the founders and the guys that were solving the problem originally came out of the University of Waterloo.
Okay. Now, talk to us about your go-to-market strategy. One of the, especially in the lower end, the moment you're in the low end of the large enterprise business, that is direct enterprise selling from a go-to-market strategy point of view. But it sounds like you have had a considerable business in the lower end of the SME or the mid-market, like 50 to 100 customer companies. What is the percentage of business that you do with that segment, and what is your go-to-market strategy for that?
Great question. And I've got lots there's a journey here as well in how to build the business, so I've got lots to share in this respect. So one of the things that I'll get on a soapbox and talk about is, it's better to have, 30 or 40% of a sub-market than to have, 0.2% of an overall market. So when we started the business, we focused on industries that had high sensitivity to cyber risk, and financial services and Wall Street was who we were dealing with. And that is a very tight market. They're geographically close. They have associations. They reference each other a lot. They don't respond as much to websites and brochures as they do to what is their colleague doing at the firm 2 buildings over. So it's a very tight referential market. So we went after that market originally, and I can say today that we're securing over $5 trillion worth of assets under management, centered in Wall Street, but globally. This would include London, Hong Kong, or San Francisco, Toronto, and other parts of the world. So,
1 second, Jay. There's some problem with the line. There's a noise coming in. Maureen, where is this noise coming from? Do you have any sense? Is it from Jay's line? All right, go ahead, Jay. Let's try.
Okay. So we started the business selling into mid-sized financial services, and these were all, as you pointed out, in the larger market, it's definitely a field sales or in-person solution sell. But what we also found was that this domain is fairly esoteric, and it does require a high degree of matching subject matter experts with sales professionals. So what we did was used a field sales model with solution engineers into what most would consider to be an inside sales size market. Our transaction size is probably worth talking about for a moment. So this is a SaaS model where most of the customers are on for many, many years. They don't want to buy this solution as a sort of a B2C kind of SaaS solution. They're really thinking of it as more of a B2B kind of SaaS solution. So they don't want to buy something that they're going to flip out in 6 months or a year. So what we did was focused on getting our average contract value back in that period of time. It was about $45,000 a year, and then signing multiple year agreements. Some of them paid monthly, some of them paid quarterly. A few of them at that stage were paying annually. If we fast forward to today, the average contract value has about doubled, and we do 3-year agreements with annual prepay in advance. So when you're looking at that sort of order of magnitude, that's the customer's looking at spending $250,000 or more with you. You can easily justify having field sales and solution engineers out in the wild. But when we started the business, it was very, market-specific financial services in New York City, but to be, more specific within what's called the Golden Rectangle, which is the area around Midtown where all the cool guys hang out now. That's really where most of our customers exist in that market, and so you could be very efficient. And I remember in the early days, we'd fly down in the morning, an hour flight from here, and do 5 or 7 sales calls and take the last flight out. And that you can be super efficient in a person-to-person model. And then once you get a referential base, we have now grown to be the #1 in that sub-market, and it's largely self-referencing. We probably still to this day have 50% of our business has come to us via referral. But then we've expanded quite aggressively out of that. We'll get to some of the market expansion in some subsequent topics, but we have found other sort of verticals, the legal industry, the high-tech industry, any IP-based industry. So you have software, silicon-based, biopharma, and legal. All are custodians.
Hold on for a second, guys. Let me underscore a couple of points that you made here. First and foremost, the average contract size of about 45,000 that you started with already pegs you at a certain target segment. So with that, it's possible actually to do some amount, and especially with multi-year deals. So you're talking about $100,000 plus dollar contracts. Your strategy of actually applying a regular field sales model, at least to the first set of customers, to develop a reference base makes a lot of sense. And folks, those of you who are doing mid-market, but going a little bit high into mid-market, where you have enough contract size to be able to do direct selling into the accounts and get some substance, some heft in the deal sizes to be able to justify direct selling. That's one key lesson to take away from this conversation. The other one that you said, Jay, that is worth underscoring is the focus on mid-sized financial services. That's a very tight community. There's a lot of referencing of one another's choices of technologies going on. And this is true in a lot of different verticals where people are getting together and talking about their technology choices, technology problems. And there are specific, domain-specific, vertical-specific issues that if you can work into your solution, then you can talk their language and sell them stuff that they are looking to buy, the problems that they're trying to heal. So these are points that are worth taking away from this conversation. There's one question that I have, Jay, as a follow-up to what you said. How did you get the first 1 or first 5 financial services contracts of the nature that we just discussed? What was the penetration strategy into that market?
Initially, it was all referential. One of the founders who had lived in New York City for many years had a great Rolodex, and he was very well regarded in terms of his information security expertise or cybersecurity expertise. So he got called in by one of his colleagues after he moved back to Canada from Manhattan, and that was really the genesis of it, and that became a reference to another organization and another and another. So it really was referential selling. They had a Rolodex, and it's I couldn't underscore. Yeah, exactly. You really got to have. It's harder when you don't have a friendly that you can knock on a door. And I mean, we use today one of our main selling strategies to use proof of concepts, where we actually install full working systems at no expense to the customer and show them what we can see from our threat analyst perspective, and getting friendlies in the initial days to agree to that, where nobody wants to be, everyone wants to be first to be second, right? Nobody wants to be first. So it's a huge advantage if you can have some friendlies to help do those trials and prove yourself out, because we all can build the technology, and we just got to get in front of the people that need the problem solved to be able to demonstrate where it can add value, or send it back to the drawing board if we need to alter it to meet customer needs. But you need those friendlies, especially at the nascent stage of tech firms.
Yeah. Now, what has been your financing strategy? You've done this out of Canada, out of Waterloo, near about Waterloo?
Yeah. Yeah, so the financing strategy, so the company bootstrapped. It was all eat what you kill initially for the first 8 or 9 years. There was no major outside capital, a few minor debt instruments, but it was always a cash flow business. But what you'll find is, your cash flow businesses don't have enough capital to sort of pivot and become a technology product marketing, or in our case, service marketing firm. So you need to bring in outside.
I'm going to stop you on that point and disagree completely, because we have case study after case study of people having bootstrap companies using services and very hefty technology companies. Oracle was founded in that mode. So that statement is false, but go ahead and talk about your journey without making general statements.
To mount a product marketing firm doing solution selling, we needed outside capital, and that outside capital was initially secured through what you'd call a Series A venture institutional investor. That first one came out of Canada, yeah. And that was a $2 million round, and then our next one came from a New York-based fund, which was a $7 million round. And then as we continue to grow, most of this capital has been deployed into go-to-market expansion, sales and marketing expense, to drive the kind of growth that we were, notwithstanding the academic studies, to drive the kind of growth we needed, and everything that all of the growth equity venture and then growth equity partners were telling us is we were not spending enough on sales and marketing expansion because we had such high customer retention rates. So we continued to pour more capital into the business, and then did 2 subsequent $14 million rounds. So to date, we've got $34 million of equity into the business through a combination of venture sort of seed stage through growth equity, which tend to be investors that come in at later stages.
And what are the metrics, current metrics of the business? And in particular, talk about the distribution within the SME customer base, and how has the business, evolved? What percentage of the business is the smaller of the SMEs? What percentage is the smaller of the enterprise? How does the business map out today?
The business, we have, handful, like a few dozen customers that you would consider, most people would consider to be enterprise. That would be more than 10,000 employee kind of organization. So the vast majority of our 550 customers are in that mid-size definition that we had talked about earlier. We've got a channel strategy where we have MSPs, managed service providers, and private cloud, virtual private cloud service providers using our solution as in a multi-tenancy fashion. We have other channel partners that are what you would call value-added resellers, where they actually take our solution in conjunction with some of their other capabilities to a customer. And then we have other channel partners that are referral, and they bring deals to us and hand them over to us for a finder's fee. But in the last 2 cases, we still maintain a large involvement in the sales process. But back to your metrics question, the things that we track the business around are gross margin. We track rate of growth. We track customer acquisition costs. And, and we've used this since 2012 when we sort of discovered some of the Bessemer metrics, which are quite well read in the industry. They had the 10 principles of a SaaS business, which were really built around a B2C model. and we adapted that to the B2B model. So customer acquisition cost and long-term value and absolute or rate of growth and customer retention. So those are the key metrics, and none of those are GAAP measures, which is interesting. And those are if you were to talk to any investors in SaaS businesses, that some combination of those, maybe plus or minus a few, that they use to establish enterprise value. So it's very important. Nowadays, very clear and understood, maybe not so much, 5 or 8 years ago, what are the key measures of health in the business. So our customer retention rate is very high 90s, 98 to 99 range. And so when you measure long-term value of customers, what you do is, you look at how many years you're going to get, you're going to get your customer acquisition costs back, and they have this LTV to customer acquisition cost ratio, and those are very important metrics. We have varied from the Bessemer model to use gross margin versus top line, which is how they originally started out. And so those are the things that we track these on a month-by-month and quarter-by-quarter basis, and do all kinds of things to improve. On the operational side of the business, we measure how fast we can onboard customers, and I've created a KPI internally, which is not in the Bessemer chart, which I call the ink to income, and that's how fast can we book a customer onto our contract and then start delivering the service so that we can recognize the revenue. And for us, that's a cash flow and an operational efficiency measure.
Can you double-click down on your customer acquisition cost measurement, because you are doing B2B, as you said, and you also pointed out through the conversation that the bulk of your customer acquisition is through referrals. So how do you quantify your customer acquisition cost given those parameters?
I'll give you some very high-level numbers without really getting into specifics. But what we do is we have that sound again here.
1 second. Maureen, what's going on? All right, go ahead.
So the way that you measure customer acquisition costs is you take all of your sales and marketing costs from the quarter previously, at least this is the way that we do it, and this is very close to the Bessemer definition. Take all the sales and marketing costs, and then you divide by the number of new logos acquired in the next quarter. So when we do that calculation, we will end up with numbers that range between $50,000 and $75,000. And if you look at what we get in terms of our average contract value, which we talked about previously, and our gross margin, we can see that from a gross margin perspective, that customer is paid back in somewhere in the 12 to 18 month range, depending whether they've gone to a channel or come directly to us. So at the end of, let's say, the average of that being 15 months, at the end of 15 months, everything for that customer going forward is in the black, so to speak. So it takes us that long to recover the cost of acquiring the customers. Now, when you look at the referral nature of it, that's just getting into the account. To actually, win the account, which means flying in solution engineers and sales guys and commissions and all that that goes into it. That's the pot of expense that we're mixing up and dividing by the number of new logos. So we look at it as what we acquired this quarter was from efforts in the previous quarter. It's not a perfect science, but it is from a quarter-over-quarter trend is a very good number to track, at least from our business perspective.
So, folks, audience, make note of one thing here that is going to be pertinent to your journeys, those of you who are building B2B SaaS businesses. These days, SaaS metrics are very well understood by investors. And even in very early stage financing, seed stage financing, Series A financing, people are tracking metrics like hawks. So even to raise a seed or a Series A financing, you're going to need to have as much understanding of your customer acquisition cost, long-term customer value, et cetera, as possible. And the better understanding you have of that, the higher your chances of getting funded. And that's kind of, you will say it's very unfair because, you know, we're just starting out, we don't understand, we can't possibly understand because we are blah, blah, blah. But it doesn't matter. The issue is that the industry is moving upstream, you know, on every quarter by quarter basis, the industry is moving further upstream. The funding industry is moving further upstream. So getting early stage companies funded without concrete metrics these days is getting very, 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 very difficult. So you're going to somehow or the other get to concrete metrics as quickly as possible. Jay, what are you seeing in Canada?
You mean from an investment perspective?
Well, in general, from the startup community that you are part of course, you're much further along now, much bigger and so forth, but I imagine that you have some window into the Canadian startup world.
Yeah, so in where I am, we have, it's called the Toronto-Waterloo Tech Corridor. It's second only to Silicon Valley. It's very large, about 200,000 tech workers. I think the Valley has 350,000. So, you know, of the same order of magnitude in a relatively shorter travel distance if you know the differences between the two. In the Waterloo end, which I'm closer to, there are approximately 750 startups right now of varying you know, lineages. Some have you know, vertical focus, some have you know, B2B, some are in robotics, some are in biometric measurement capabilities. It's a full cross-section. There's like a Y Combinator sort of early-stage funding organization here. There's a tech association that provides a lot of mentoring services for startups. So separate from the startups, there's another group called scale-ups. We're in that scale-up category. So those are like the, you know, the 20 to 50 million or 20 to 100 million companies, and there's about, I think there's about 80 of those in the, you know, sort of a 30 or 40 mile radius of here. So, but there's lots of startups, and some of the startups go to the Valley, some have come from the Valley. One of the things that we've got here, besides the University of Waterloo, is we've got some of the top machine learning and artificial intelligence researchers in the world, some from Google that are associated with the University of Toronto. There's a huge push in the Toronto end of this corridor around machine learning and artificial intelligence. You'll see lots, I'm sure, in the coming years coming out of that. So these are interesting organizations because it's all data science applied to, you know, a lot of SaaS or large analytical opportunities. So we're seeing a couple of these pockets emerging. Other areas in Canada, Montreal has a pretty strong, it used to be known for gaming. They've got a strong AI machine learning group as well. Vancouver has its own little enclave of, well, not little, its own enclave of tech firms that run a wide cross-section. They've got quantum computing there. We've got quantum computing research here. Canada's a very spread-out country with these folk, you know, these clusters around the major metropolitan areas. But it's really, it's such a vast country. It's very much a north-south, so in Canada, you know, you get an idea, you can test it locally, but your market is head straight south, and that's been my, you know, past 6 companies have been largely on that model.
Mm-hmm. Great. All right, Jay, we're going to switch to the mentoring part of the session, and I believe you're staying, right?
Yeah, I can hang out.
Great. So folks, let me set a little bit of expectations before we go into this part. Remember, this is a working session and we are on your side. So the only reason we are doing this is to help you accelerate your journey, get some roadblocks removed, just discuss some strategic issues and so forth. So no need to be defensive. This is safe. You don't need to you know, feel uncomfortable or nervous or anything. Now, you may disagree with the feedback that you get here from me or from Jay or from anybody else in your peer group in the room. The decision is yours. It's your venture. You make the decision on how to proceed with it, and that's perfectly fine with us. One thing you have to understand is that not all businesses can raise money. Venture capital financing requires that you are capable, your business has the capability to grow at a certain pace. And this is generally, VCs are trying to go from 0 to $100 million in 5 to 7 years. And that is a very, very fast growth trajectory. Not all businesses have the characteristics to grow at that pace. So you have to be mindful of that and see whether your business is venture fundable or not. And if not, there are many other ways of building businesses, financing businesses, growing businesses, and you need to pay attention to those. We are going to start with
Chandra Arora.
Chandra Arora.
Chandra Arora.
All right, you're already on the call, Chandra. Go ahead.
Yeah. Good morning, Smyrna.
Good morning.
Can you hear me?
Yes, we can hear you just fine. Go ahead.
So shall I start?
Yes, please.
Yeah. As you see on the slide, my name is Chandra Arora. I am from Bangalore, India. And my experience, I have 5-year R&D experience in companies like Chatter, Caterpillar, and General Electric, GE company. And the company name which I am founding is Toep, the Tau of EVA power. And the peculiarity about me is that I am a core mechanical guy, I am not an IT guy. Please, next slide, please. So first, introduction about my company. As we know that world energy trends is moving toward unconventional energy resources. Like you have seen in the picture, wind power, they are very big in size, but very difficult to install. Solar power, they are very compact in size, but they are very costly and less efficient. Biogas plant, they are compact in size, less cost, but they are unhygienic to society. It will give some bad smells. So next slide, please. So my company mission is to make some products which are compact in size, having the best features of like wind power, energy, and you can use in normal homes, household things. So the cost will be less and the efficiency will be high. So products should be like that. It's very small and compact in size. You can put in a small pocket. So my company vision is just we don't believe in going to Mars. We just believe in making Earth a better place. So the previous slide, please. Just missed one slide. Previous slide, please. Smana, previous slide, please.
Chandra, your slides are not readable. What you have here is absolutely not readable. The color scheme that you have used on these slides, you should not use them for presentations.
Okay, but next slide is not showing. Next slide, I'm not able to show the next slide. Not. Can you please the next slide, please? Oh, it's not showing.
It's not showing. This is what you have as the next slide.
Yeah, it's not showing. It's actually. Okay, I will
so go ahead, try to explain in words what you're trying to do without the help of slides, actually, because your slides have too many words anyway.
Yeah, it's okay. I will explain it. What have made it, actually we know we all have the mobile chargers, but we don't have the power sockets to charge the mobile phones. But when we travel, we have this charging problem. So what we do the power bank. But if power bank don't have any power, then what we will do? So what I made is a wind power mobile charger. It can charge your phone as well power bank when you travel with train, bus, car at any speed. And this is the best design I've developed by learning from the failures of the other chargers. Its name is Toep, Conceptual Emergency Power Toy.
Okay.
About this charger is that, hello?
Yes, go ahead.
The picture is missing. In the previous slide, the picture is there, how it's work. The picture is there. It's a very small size you can put into a pocket. It's a very small size, like a mobile charger, normal charger.
So does the product work? You have already got a working product?
Yeah, its prototype is ready. I'm launching it next month to the market.
Have you done any kind of validation?
Yes. I have shown
what have you done?
I have shown the FICCI exhibition. A FICCI group is there, Federation of Indian Chamber of Commerce. I showed to some scientists, they like that product.
No, but who is the customer for this product? Have you done customer validation?
For that, I have to give some 5-3 products to some customer just for 3 uses, just to get some customer responses. That I have to do.
So what is your plan? What is the ideal customer for this business?
Just go back. This is there. The input cost of this product is $20, and I'm selling it at $25. First, I'll make a promotional video. First, I'll make a small video of that product. Put it
no, that's not my question. My question is, who is the ideal target customer for this product?
Normally, in India, normally 80% people travel by local trains and local buses. We don't have charging facilities there. That are my target. They're travel passengers.
And how do you get to that audience?
I will just first make a video, put a video on charging on train and buses, put that video on Facebook, and put some sample product into some market. They use it, they promote it. Once I got the idea after 2 months, then I go for production, like 100 products. Once I got the order of 100 numbers.
You are expecting that you're going to get orders for 100 products without producing anything, and people are going to pay for it in advance.
No, first I will give some first I'll make 10 products, give free to some customers, take some good feedback from the customers. On that behalf, I'll put in some Amazon e-commerce site. First I'll make some 10 products. So in the backside, just go to backside, you can see this thing. What is the projection? How good do these projections?
Yeah, projections don't make any sense right now.
Okay. So this is the second product.
Let's go to your questions. I think we understand what you're doing. Let's go to your questions.
Yeah, this is my second product. This is the second product I'm going to launch. Just go back slide.
You can't launch, you don't have the money to launch multiple products. You can launch one product.
It's true, but if I get the support from the college, I can launch it. The prototype is ready for both the products. I just need the finance.
So when you say I just need the finance, you think somebody is going to just give you money to launch as many products as you like? Do you think that's how financing works?
I have the working models. I can show the models. I can present the models. It's all working.
So do you understand my question?
Pardon?
Do you understand my question? When you say this, when you make the statements, I just need the financing to launch all these products, do you understand how complex it is to raise financing?
Obviously, it should fulfill some problem. It's a big problem statement is there. If it's fulfilling any problem of the society.
Do you have questions?
I just want to show my products, what I've made, just which I'm going to launch in the market. And I need.
So that's not what this, Chandra, that is not what this forum is for. This forum is for asking questions and getting help in building your business.
My question is how you get the platform, just how you got the correct person so that you can help me in launching this product. Like Paul said, they have some Gallup kind of startups, which are at initial state at research level. Like just now Paul said, we are making some research products. These are not full startup, but they are in the state of startup. So I get some college platform, something like a platform.
So you need to learn how businesses are built. So right now, what you know how to do is build prototypes of products. The next, and you're very young, and you're in school and everything, which is fine. So that's something you've learned it well, and you've created some prototypes of products. The next thing you need to learn is how to build a business.
Okay.
And there are specific ways of how to build a business. There are many platforms for learning how to build a business. This is one of them. 1Mby1M is one of them. So if you hang on, later on in the program, I will talk about how to use 1Mby1M as your learning platform. And there are others, like Paul is describing a group or a community, an ecosystem in Canada, where and how those entrepreneurs are learning and how they are building businesses. And there are, all over the world, there are platforms, and the 1Mby1M program is a global platform where we work with entrepreneurs all over the world. So the thing that I see missing in your current understanding is the knowledge of how businesses are built. Okay?
Yeah, thank you.
Jay, do you want to add anything to what I said?
Yeah, I mean, when I was listening to the presentation, I had the same view as you that Chandra's clearly an innovator, can get a working prototype, but the unit economics of how you make money or how you generate net earnings out of this wasn't clear at all to me. So I think you know, there's the solving the technical, the device part, and then there's the how do you take that device into the market and commercialize it. Those you need to at least have a talk track or a storyline that you thought through this, and you understand that there are a whole lot of expenses. The only one slide I noticed where it looked like there was a 20% margin in the business. That scares me, and that to me says the unit economics don't exist there. You want to have a much greater margin, at least, or potentially get to that margin. So understand that and be able to tell that story is where you're going to get the investor's attention.
And also, I don't know if I believe those unit economics, right?
Exactly.
Because it's one thing to do prototypes, it's totally another thing to do scaled manufacturing, and then you have to also finance through those unit economics. You're going to have to finance customer acquisition costs, customer support, and everything. How do those unit economics play out, and so forth? All that needs to be understood for this to become a business. Right now, you have a little concept, and for this to become a business, first and foremost, you need to learn a lot, and that's where I would focus right now.
Yeah, maybe one of the things that might work, and I've seen many scenarios like this, is to find a business person, someone that gets your idea, that can help you with that. Somebody that's gone to business school and they're never going to be doing the technology, but they know how to go to market. And maybe someone who's got some scar tissue, knows mistakes to avoid in the future. That sort of thing. You can get it through mentoring, but you might be well served to find a partner in the business to help you with this.
A good business savvy person to work with you as a co-founder, maybe that could be another way to bridge the gap. Okay, we're going to move on to Sakshi Talwar. Sakshi, please unmute your line and come and tell us what you're working on.
Yes, absolutely. Hi, how are you?
Good. Go ahead.
Great. So, hi. So I'm Sakshi Talwar, and I'm the co-founder of Roundtable, which is an e-commerce platform for one-of-a-kind handmade rugs and carpets. And these are the other things I do apart from running a business. So we can go back to the next slide. Okay, so as you know, Rugs and Beyond is basically an e-commerce platform for selling one-of-a-kind handmade rugs and directly from the source, eliminating the middlemen. So basically, we're providing a platform to local weavers and craftsmen to sell their crafts, which are handmade carpets, to customers worldwide. And we offer free shipping worldwide, which is a big deal considering rugs and carpets are heavy items. But we've kind of worked it out in such a way where we are able to provide free shipping. So that's one of our plus points and one of our USPs, apart from having one-of-a-kind products. As far as the customer target markets are concerned, our target market includes home buyers, people refurbishing their homes, interior designers, architects, and home decor enthusiasts, hospitality. So the market is huge. And we go to the next slide. So the biggest problem is, as of now, there's a huge gap between the local weavers and craftsmen and the end consumers. So India accounts for more than 70% of the world's market share as far as the handmade carpet industry is concerned, which is highly unorganized and decentralized. And the carpets and rugs that we are selling on our platform are such that they're all one of a kind, and to make each product, it takes about 4 to 7 months to weave a single product, depending upon a variety of factors like the number of knots in the carpet, the design, the color combination, the material used. And so basically, we're trying to bridge the gap, and we're trying to be an aggregator between the local weavers and the end customers. And the second problem that we're trying to combat is that there's a lot of child labor used in this industry. And according to a recent report by Harvard Business Review, it was reported that 3,200 cases of child labor were reported recently in the year 2014 and 15, which is huge. And we're trying to combat that by collaborating with affiliations and organizations who are trying to eliminate child labor in the handmade carpet industry. So next slide. So what is our solution? Our solution is that Rugs and Beyond, what we intend to do is Rugs and Beyond will be a one-stop shop for one-of-a-kind products, mainly carpets. And of course, we can also include other product-related categories like fine art, decorative accents, and another, a lot of times we get a lot of inquiries from customers where they are not sure they're not sure what to buy and they cannot really find what they're looking for because of the size of the rug, maybe the color combination. So our solution is that we also provide custom orders, which is huge, according to the client specifications, and we also have in-house carpet designers. And considering I've studied interior design as well from Parsons right after my MBA, I also design rugs. So that's one of the things that I also do. Apart from that, we also possess in-house ready stock. And, the best part is that these products are not like a red T-shirt where a red T-shirt can be produced in no time. They're all one of a kind and they're all unique, and that's one of our biggest USPs. So next slide, please. So as far as our segmentation analysis is concerned, so we are basically a B2C platform, and we also intend to sell it to various marketplaces and collaborate with interior designers and maybe have omni-channels in the future. Next slide.
So you are not a marketplace, you are a pure retailer.
Well, as of now, it's a combination of both. We have our own products. We are also we're also providing a platform to other vendors and weavers to sell their products on our platform. So it's a combination of both. So we're not just a retailer. We're not just providing a platform to local weavers. We do have some of our stock. At the same time, we're also providing a platform to vendors and weavers who have so many handmade carpets which are just lying in stock, and they need a channel to sell their products and market it for them. So as far as our customer acquisition and marketing strategy is concerned, apart from selling one-of-a-kind carpets, we also, as I told you before, we also plan to include other related product categories, while the focus will always be on one-of-a-kind rugs. And we intend to collaborate with interior designers in providing services to customers as well, and having offline events and partnering up with other brands. And of course, launching our own Rugs and Beyond YouTube channel to educate customers, because there is one disadvantage that customers are not able to touch and feel the product when they buy something that is medium to high range. So it's very important to educate the customers, and that's what Rugs and Beyond TV channel will do, by educating the customers in knowing the difference between a handmade and a machine-made carpet. And basically, as of now, the kind of traction that we've seen is, since we are still in our beta launch, we have had sales from customers in New York, in California, Belgium, and different countries. And also, like, whenever we do get customers, we do not get immediate sales. It always leads to an email which gets converted into a sale, because they have a lot of questions and which I'm able to answer, and it takes a lot of convincing power to tell them that, you know what, whatever you're buying is unique. And sometimes they ask for additional images, they ask for certifications, which we do provide. So apart from that, so what we're trying to do is we're trying to disrupt the e-commerce space of the handmade carpet industry, which is huge, and we're trying to provide a channel to all these local dealers. And as far as the questions are concerned, can I start with the questions, or do you want to say something before? I'm not sure.
Well, let me give you a few observations, and I'll ask Jay to do the same. We like niche e-commerce very much. We also like niche e-commerce marketplaces very much. The thing that I see problematic in your story is that you're trying to be both, and these are two considerably different businesses. If you look at the history of the companies that have done both, they started with one and added the other model much later in their histories. And this is true about Amazon. It's true about eBay. Never actually went out of their marketplace business model. They remained marketplaces throughout. Amazon started as retail and then became a marketplace as well. Now they do airport retail and marketplace. Same with Flipkart. Flipkart started as retail and then became a marketplace also. So this is how businesses are built. And the problem I have with with all of you who are trying to do too many things right away is that you will not be able to handle all these different variations. The best way to build a scalable business is to figure out one thing and execute the hell out of that. So I would encourage you to choose one or the other. And my read in your business is that it's going to be a lot easier to build a niche retail e-commerce business as opposed to a niche marketplace, for the simple reason that the kind of, the artisans that you're talking about, the carpet weavers, they're not the savviest people from an online marketing, online listing point of view. So if you think that they're going to be able to self-service themselves to become great, successful merchants on your marketplace, I don't think that is a reasonable assumption at all. And secondly, the shipping and order fulfillment is going to be very tricky for you to provide any guarantee to your customers on, with that being your merchant base. So my advice to you would be to just focus on retail, work with the weavers, and focus on selling them and fulfilling the orders yourself so that you can guarantee a certain user experience and a certain fulfillment guarantee to your customer base. And I have a lot of other observations as well, but let me stop for a second and have Jay weigh in as well.
Yeah, I was sort of coming to some of the same conclusions, but great observations there. One of the things that struck me was you have to build your brand and reputation, and I would think one of your measures of success would be you are the go-to retail spot, online retail spot for rugs, and that means you need to control quality and your whole supply chain, and bringing in, going to the marketplace approach. If your quality is all over the place, you could deprecate your brand before it even gets started. So I would be very concerned about controlling that initially with your own team in India, and then figuring out how to get to the market and becoming the go-to. Like you have to be easier for them to order from you than anywhere else. That's sort of the way I would look at it, and create a very aspirational objective. So that's one thing. And then the other thing that I observed, and this is more in terms of later on in your pitching, but how big is your addressable market? Like how much is spent on, let's say you're gonna crush it on rugs, and leaving the other pieces aside for now. If you're gonna crush it on rugs, how much is spent annually on these, and how is that market broken up? Like, do you have is there a 50% market share, 1,000-pound gorilla you have to displace, or is it totally fragmented and there's a bunch of 1% and 2% market share firms, and you can become the 1,000-pound gorilla and become that dominant one? So I think a little bit of that market fundamental research would be quite useful for you, and you can figure out where they're spending the most. Like maybe it's the U.S., maybe it's not the U.S., maybe it's Europe, but you got to understand where you're going to point the gun. And I would reinforce Samantha's message of be very focused and get good at one thing first.
And there are some advantages to what you can do, Sakshi, like the weavers, the carpet weavers, they don't have a lot of channels, right? So you could do consignment deals with them where you photograph and you sell the product without having to buy these products, in terms of inventory.
Right. That's exactly right. That's exactly what we're doing. So as of now, like 90% of the products on the website are our own. They're all in-house. They're not from the weavers. I mean, they are from the weavers, but I mean, they're not on consignment.
You bought them.
But at the same, yes. And so 90% of the stuff that you see on the website is in-house. And apart from that, only 10%, which, there's a section on the website which says custom order. That's the section where the designs of the weavers are there, and there are different patterns which are there, which can be customized according to the color and size, whatever the customer chooses. And those are not in stock. So those are from the weavers, but 90% of the products are in-house at the moment.
Yeah, so there's a few, major points that you have to worry about. And one of the things that concerned me also is what you said about high-touch selling, right? People are not buying very easily. They have a lot of questions. They want to talk. There's a lot of pre-sales cost associated with actually completing a sale. And as you heard Jay talk about earlier, is when you have to do high-touch sale. You know, he's selling cybersecurity. That's a high-touch sale. When you have a high-touch sale situation, that pre-sale situation, that means you have to work out unit economics such that you can pay for customer acquisition costs, you can pay for high-touch pre-sales, and you know the order value and all of that. That kind of needs to compute from a unit economics point of view. So these are all question marks in my mind, which we need to figure out how to get to good, solid, economically viable answers to.
That's exactly what one of my questions was. That you know, in order to sell high-ticket items, because one option could be that we send samples, but at the same time, the cost to send the samples is again a lot, because it's not that we have ready samples, because each product is one of a kind. We have to develop the sample, which costs money, and it won't be that the customer would be willing to pay for the sample. At the same time, we have to ship the sample. So I don't think that's a viable option in sending samples. That's why, I was just wondering, what are the other ways where we could actually, you know,
people are buying high-ticket items online. People are buying diamonds online. People are buying furniture online. People are buying all sorts of high-ticket items online. So buying high-ticket items online is not unknown, and you have to study how they've done that. We have lots of case studies of people who are selling very high-ticket items online, and you're going to need to learn from those.
Do you have
all right, so we're going to need to move on. Actually, we gave you quite a bit of feedback. Start processing them, and we can do more Q&A after I've finished the next presentation. We have one more.
Okay, absolutely. Thanks a lot.
You're welcome. Suvrajit Sarkar, go ahead.
Hi, everyone. Hi, Shramana. How are you?
Hello. Go ahead. Tune Pixel.
Yeah. Hi. Yeah, that's right. So this is me, Suvrajit Sarkar, and I am a true adventurer both in personal and professional life. And that is explained by the fact that I have started two companies in the past. Like the first one being a little profitable, but not as much as that I would like it like that to be. But the second one did not make any profit at all. So I just spent 2 years working 16 hours, no weekends, no holidays. But at the end of the day, we didn't make any profit. And that.
So you're a serial entrepreneur on your third run.
Yeah, that's right.
Okay.
Yeah, that's right. This is the third company that I just started last month. With 3 other co-founders, and all of them I have been working together with for about 6 to 7 years. And all of us share the same passion of building our own company into gaming. So moving to the next slide, this is what I'm going to present today. The previous one, previous to that.
You want the previous slide or the next slide?
Yes, the one. Yeah, this is what I'm going to present. It's Patti Raga. So if you are in India, you would hardly miss a Patti game, which is a card game. But I did played offline, it's played with real cards and offline. But of late, there are many companies who have actually achieved a lot of success in mobile gaming, bringing out Patti, into the mobile platform. And it has eventually become a $30 million market, in the last 2 to 3 years. So we being from, the gaming background, we understand the nuances, and we know that, there are gaps in the existing solutions. So we actually hit the road, and we interviewed a lot of target audience. We figured out exactly what the type of audience are, and we interviewed more than 100 people who play Patti on the existing solutions. And we figured out like the missing areas. So all these Patti games are, they do not offer the extensive gaming gamification that I would be presenting in the next few slides. So I'm going to the next slide. That's my target audience: Indian men and women between the age of 18 to 45, and I'll be launching them in both iOS and Android platforms. Moving to the next slide. The next slide, please. Yeah. Thanks. So these are the gaps that there are many about 20 different gaps or the problems that the existing solutions are not addressing. But these 3 of them are the top ones. So gaming, gameplay in the portrait mode. So we hold the phone. It's more convenient to hold a mobile phone in a portrait mode rather than landscape mode. And most of the existing solutions did not address that. And obviously, most of them did not have a very, very lucrative UI. We are presenting an international quality UI design. And none of them had power-ups and widgets, which are features very elemental to the casino games, but not so popular in Team or any kind of poker games. But we researched and figured out many of the players would love to have a little bit of twist with power-ups and widgets to disrupt the traditional or the conventional gameplay. Moving to the next slide. It's a comparison between the existing, if you see the slide before, 2 slides before that, actually.
So let me ask you a few questions. This presentation will be more effective if you give us some, vital statistics of the business that you're going after. So what is the monetization model that you said there are several quote-unquote successful Patti game applications that are already in the market in India. What do you know about their monetization? What are the comparables? What do you categorize as successful?
Right. So they have been able to monetize, and they have a very, very high LTV. So ideally, the top 3, if you see the iOS and the Android App Store ranking. So top 3, 3 Patti games appear in the top 3 charts in the grossing section. So top 3 players contribute to $30 million of annual revenue, and they have about 10 million captive users. So
how do you know this? Where did you find this information from?
From App Annie, and there are other websites which actually provide direct data from the review. And I've also worked with one of the companies called Moonfrog, which is among the top 3 companies in that list.
And their monetization model is what? In-app purchases, ads, subscriptions. What is the purchase model?
Right.
Sorry?
So they have a mixture of in-app purchases. They have a mixture of both in-app purchases and interstitial ads. So in-app purchases are you play with chips. The turns are played with chips, and as you start losing, a player actually loses a lot of chips, and then eventually need to purchase chips from the store, from the store in terms of
primarily. Okay.
Right.
And
also
then the next
ads.
The next question that I'm going to ask you is, given that there are 3 games of the same kind in the top 10 in both the app stores, Android and iOS, how do you get found? So that's the question about launch. And this is, I'll just qualify this by saying today, not just in India or in the US, everywhere, the app stores are very crowded. Getting a new app to be found and installed is incredibly difficult. So the fact that you are charging down this path, what is your strategy for getting found?
Right. So we are going to run through a series of, traditional or conventional activities like app store optimization, search engine optimization, app marketing, email marketing, press releases, and social network marketing and engagement, and cross promotion on other apps. So all these are very low cost activities that we are trying to start with, and also we are going to evangelize. We are just going to hit the road and evangelize and reach out to as many real players as possible. So in our last survey, what we figured out is that people are really charged up about talking to someone from a Patti development company about their game, because they love their game and they would love to have more variations of this game. and it's more of a social and a community-based game. So I think that the player would definitely invite many of their friends and family members to play along with them. So if you are able to evangelize and reach out to as many audience on a one-on-one basis, I think we'll actually spread virally in that way as well. So yeah, I'm actually banking on all of these combined together to reach out to the target audience.
I have to say, Suvrajit, I'm not convinced by what you said. I'm looking for an unfair advantage. All these companies that you list, 1Mby and blah, 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 they all cost money to market through.
Right.
So, where is that money going to come from? No one is going to give you money. No one is going to give you investments to market a Tin Patti game right now. So you're going to have to somehow the other self-finance that go-to-market strategy, and it's not clear to me what is a cost-effective go-to-market strategy that is going to help you mitigate the rather crowded nature of the app stores.
Absolutely. So what we had planned is that what we having planned is that we will initially fund a little bit of app marketing ourselves just to get the feel and the key matrices. So some of the areas, some of the key matrices that we'll be focusing on is the retention data and the engagement data, and also the the amount of time that is being spent on other games versus our games. So obviously we'll be looking at the benchmarks of all the retention data, and once we get those data, we are confident that we'll be able to convince investors to actually
the fallacy of your business plan is that you're assuming that somebody is going to fund you to get to traction, and that's just not going to happen. That is just not going to happen. And that's where I think this is an unworkable situation. Let me turn this over to Jay to weigh in on what he sees here.
Yeah, my expertise not in consumer mobile devices, but I do share those sentiments. Your model is it doesn't have any sort of seeding ability. And as you were talking, I was thinking about how do you have the equivalent of a freemium or some way to get seeded into the market where you can use some viral group, like, I don't know, maybe it's university students or something, some small sub-market that you can get this as the, you got to be the best app to get the eyeballs, and then there's a way to monetize that through maybe buying the chips or something subsequently. But I agree with Srinana. You've got to figure out a way to do this that doesn't need $1 million of funding, and it's got to be very much bootstrappable. If the technology is largely built, that's one big hurdle. Now you got to figure out a very cost-effective way to distribute through the marketplaces, and maybe you're doing a share on revenue instead of having to fork out on the partners that are bringing new customers to you.
I don't think anybody will do that. The companies that you've listed there, these are basically ad networks, right? Ad networks, and these are large ad networks. They're not going to, let you just, you're basically going to have to pay to get on them. By the way, Jay, the model of in-app purchases is a freemium model, so people can start playing without paying anything, and then when they want to get more chips to play, they will need to do in-app purchases. So there's a bit of an advantage there, but I agree with you. There's no way $1 million is going to be available to do anything. It will have to be bootstrapped. So Suvrajit, I'm going to need to send you to back to the drawing board and figure out how you're going to bootstrap this to significant traction before assuming any financing.
Okay. Yeah, that was actually a part of my question, how do we scale up in user acquisition? Because, we could acquire about 10,000 users to 40,000, let's say 100,000 users at the most. But how do we
scale up? Do you know what is the average in-app purchase? How much do people spend in these games?
They spend about like 200 to 500 rupees per month on these games.
So $3 maybe, $3, $4.
Yes, yeah, that's right. Average LTV is about $3. Average spend, ARPU, that is average revenue per user, would be about $3.
Yeah. I don't have a solution off the top of my head on how you bootstrap this, but you're going to need a lot of customers for this business to make any sense. Are you doing it as a bootstrapping with a paycheck, or are you doing it full time?
Yes. I mean, like, yeah, I mean, we are bootstrapping it right from this, sorry, I couldn't get your question.
Do you all have jobs, or are you doing this company full time?
Yeah, two of us have jobs, and two of us are like full time into this one.
Yeah, I would advise you all to go get jobs so that you can tinker with this on the side and figure out how to get to some revenue if this is what you want to do, but it's not going to be easy. It's not a great business for you to go into. If you came to us before starting down building all this technology and so forth, I would have told you that don't get into this business. It's not a good business to get into.
Okay, right. So is there any particular way that we can, the companies that actually started off, they also bootstrapped from this bootstrap and eventually got funded. So they did not do anything different. They started from the scratch, and
yeah, but the market was open. Now there are 3 major players in the market that are dominating the app stores. So the minute you try to do any kind of discovery, the people who are trying to discover apps are going to discover those first, and they're going to go to those. So they dominate the app stores.
Right. So is there a way that we can, we are doing extensive customer research, and if we find something which are like drastically new and different, can we patent them and and create a new market and try to attract the existing users to that market?
I haven't seen that strategy in your business so far, so I don't know. Until I see a strategy or until I can come up with a strategy myself, I don't know. Right now, what you've presented, I think, is a very dangerous track to go down. Sure. Especially if you're doing it with your own money and you're doing it full time without any income and so forth. I would advise you to go start doing jobs and doing this on the side and figuring out if you can find an angle with which to do something differently. Because if you go head on with these 3 players that are dominating the App Store, I don't think you're going to win.
Okay. That's a good feedback.
Okay. All right, folks, we're going to switch a little bit. I'll spend a few minutes telling you how to use 1M1M for those of you who want to use this as your platform for learning. And then we're going to go back to Q&A, so line up your questions in public chat, or if you want to call in, we will have time for Q&A. Now, one request we have for you is if you like what we are doing here, as you can see, we give very candid feedback. We're not sugarcoating feedback. We're not telling you what you want to hear. We're not giving you false pats on the back. Oh, you're doing great. I could have told Suvrajit, oh, you're doing great, keep going, but that's not helpful, right? So instead, we have taken the approach of being completely candid and completely transparent and giving you feedback that is honest, not sugar-coated. And if you like that, then please refer serious entrepreneurs to work with us, and we'll be very, very happy to help you along. 1Mby1M, as you know, is the first global virtual accelerator in the world. You can access it from anywhere in the world. You can access it from Timbuktu. You don't need to be in any major startup ecosystem or anything, basically. You can access it from wherever you are. And our goal is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And remember one thing, over 99% of the businesses that go out to seek financing get rejected. However, in that pool of the other 99% of entrepreneurs that we call, the way we call them, there are many, many viable businesses. They may not all be venture fundable, or maybe some are not venture fundable yet. With proper help and proper guidance, they may become venture fundable at some point. But definitely there's a large percentage of those that are viable businesses, and they have to be built bootstrapped. They have to be built maybe with different kinds of financing. There's inventory financing available for e-commerce businesses. There's receivables financing. There's all sorts of different ways of building and scaling businesses that are not exponential growth rate businesses. And no accelerator really focuses on this inclusive, the other 99%. In our program, we do have venture fundable businesses, but there are also lots of businesses in our program that are not venture fundable and will not be venture fundable, but still will become viable, bootstrap, profitable businesses. And that's something that you need to keep in mind. Is don't assume that your business is fundable. Like what we just discussed, Suvrajit's business is not a fundable business. So, however, the next question in Suvrajit's case, there's a bigger question mark. Is this a viable business? I'm not sure. But in a lot of other cases, they are viable businesses. And you need to figure out a strategy that fits your business. In terms of resources, you go to the website. Everything is at 1Mby1M.com. We have a great blog. All the case studies that we have are available for free on the blog. Jay's case study is on the blog, and you've now just met Jay as well, so we have this combination of both entrepreneur case studies as well as these roundtable discussions and so forth. There is the Entrepreneur Journeys book series. That is a case study-based book series. There are 12 to 16 case studies per volume of books, and we've published 12 books. All of them are available from Amazon. These roundtables happen every week. This is the 360th roundtable. You can use them for your learning. Recordings are available. The full acceleration program from 1M is the premium program. And in there, we offer you extensive methodology guidance, full curriculum, online curriculum that you can do at your own pace from wherever you are, at your own time, at your convenience. We do support quite a lot of people who are, moonlighting into their startups. Keep a paycheck while you're validating your business idea, and that's where methodology and curriculum guidance helps a lot. We help you with business development through our contact base. We help you with strategy consulting. This kind of roundtable format we have for premium members only. And then we help you with financing, but you have to be financeable for us to be able to open up our Rolodex to you. A lot of companies who come to us want to raise financing but are not ready to raise financing. So we have to work with you to see if we can get you to a point where you would be financeable, and then and only then can we introduce you to investors. And finally, we have a lot of clout in the media. We touch a very large community of people in the startup ecosystem. Our community today is probably about 500,000 people, and we help you get the word out about what you are doing to that universe. And we have a lot of influence in that space. So getting the word out about what you're doing is something that we are very good at doing. The 1M1M self-assessment is our free questionnaire to help you develop strategy for your company. Go to the website and put yourself through the 1M1M self-assessment. Every investor is going to ask you these questions, and you need to be able to answer these questions. And you, whether you raise outside money or not, ever, you are the first and the most important investor in your company, and you absolutely should put yourself through this questionnaire and develop solid strategy. If you run into methodology gaps, like I'm sure, Chandra, for instance, today we heard from him, he knows how to develop a product, a prototype, but he doesn't really know much about what business is and how to build a business, all that. So there's a lot of methodology gap. And by the way, first-time entrepreneurship is a very steep learning curve. So, so you kind of need to learn methodology. And one easy way to learn methodology is go do 1M1M Basic, which is our curriculum-only option, and just study the methodology and gain kind of like this mini MBA in entrepreneurship so that you can very rapidly, in a very efficient, compressed format, learn how to answer these strategic questions. So go dig around on the website. You'll find lots of information about the program, lots of FAQs, video FAQs, etc. The curriculum is case studies and video lectures based. We've had over 750 successful entrepreneurs from all over the world participate in developing this curriculum, and all their case studies are in the program in text and some also in video format. You essentially get to stimulate the feeling of having a 1-hour coffee with somebody who's built a substantial business, who's willing to share their journey with you in a lot of detail. And that is the Entrepreneur Journeys case study model. And we've taken all that, packaged all of it up, categorized it, curated it such that you can very quickly, very efficiently learn from others who have done it before. This includes 50+ unicorn entrepreneurs, 400+ venture-funded entrepreneurs, and over 300 bootstrap success stories. So this is why I push back on people who say that you cannot scale businesses by bootstrapping. We have case studies of companies who are operating at $500 million a year revenue that are completely bootstrapped. And that's, it can be done, it has been done, and we have the case studies. So anytime people tell me that you can't scale a business without outside financing, I don't buy it. But our methodology is lean, capital efficient, bootstrap startups. And if you're raising money, the answer is bootstrap first, raise money later, just because that's what the market wants. That's what investors want. Investors want you to validate and even get some level of traction before anybody is willing to invest in your company. So that's just the reality of, unless you were the former, VP or former architect of Facebook, of their whatever system, that you can come out of Facebook and get finance to start a new venture on a specific problem that you encountered in Facebook, or some equivalent level of stature. For most entrepreneurs, this option doesn't exist. Okay, these are the roundtables in August. Maureen, I think we do still have a roundtable in July 27th. We do have a roundtable which is not on the schedule. Apologies for this mistake, but we do have one more roundtable, but in the middle of July, I'm traveling, so we don't have roundtables. We'll resume with a full schedule in August, but we do have one more in July as well. Okay, Q&A, please feel free to ask questions. Jay and I would definitely answer, as well as your peer group may have questions, answers, issues that they want to bring up. Sakshi Talwar is asking, I do agree that to begin with, we should focus on being an e-tailer rather than being a marketplace. With that being said, how do we combat the problem of having customers buy products online without touching and feeling the same? What is your overall opinion about the viability of rugs and beyond, and how scalable is it? I haven't done any of the analysis to make these conclusions, Sakshi, but there are specific methodology of how to evaluate market size. There's a whole TAM model that you're going to have to develop. I can teach you how to develop the model, but I'm not going to develop the model for you. You're going to develop the model using the methodology that I will teach you, but you're going to need to do the analysis, and then you and I can both look at that analysis and decide how scalable is the model and how big can this business be. As for buying high-touch products online, as I said, there are case studies. People are selling diamonds online. So you can sell high-ticket items online, but there are, you need to come up with a strategy of how to make the customer comfortable in, doing this, in conducting that kind of a purchase. So as a result, the level of information that you provide on that particular product needs to be quite extensive and quite differentiated. So we can work on coming up with strategies like that, but I haven't, this is the first time I've met you, this is the first time I've heard about your business. I haven't really given it much thought yet. But I do believe it's doable. Very high ticket items are being sold online right now, and including high-end fashion, high-end jewelry, furniture. So it's doable. You just have to work on the user experience of how to make the customer feel comfortable and learn from those other case studies. Folks, those of you who have questions about the 1M by1M program, feel free to contact Irina Patterson, irina@1M1M.com, and she'll be happy to work with you to figure out whatever questions you have. Anybody else? Questions, comments, issues? You're very welcome, Sakshi. And Jay, thank you so much for staying all the way and providing your inputs to the entrepreneurs. We appreciate it very much, as we appreciate the story of how you've built your business.
My pleasure. Hope it was useful for those in the trenches trying to build a new business. I'm very much, this is my sixth one, so kind of addicted to it, and you'll probably find the same, those that proceed on.
Great. All right, folks, I don't see any more questions, so we're going to adjourn the session, and we'll meet you back at the end of July, same time, same place, and you will, you have all the registration information for the roundtables on the website. Go ahead and book your slots, and Maureen will make sure that you have a slot to pitch in the upcoming roundtables. All right. Bye-bye, everybody. Good luck making lots of progress with your ventures in the meantime, and we'll see you back soon. Bye.